Welcome back to the channel, and welcome to today's Crypto Daily Roundup. This is where we cut through the noise, look at the numbers, and figure out what really moved the market over the past 24 hours. And today, even though prices are looking a little softer, the stories underneath the charts are telling us something very different. Bitcoin dipped, Ethereum followed, but institutions are still pouring billions into crypto funds. A brand new utility token is sparking retail mania before its major unlock. One of Japan's biggest companies just doubled down on Bitcoin, and regulators are moving faster than most people realize. By the end of this episode, you're going to have a clear picture of why the short-term dip might not mean as much as people think, and why the infrastructure being built under the surface is the real story. Let's start with the obvious: Bitcoin. It slipped under $108,000 today, and Ethereum fell back as well. If you just looked at the prices, you'd think sentiment was weakening. And maybe it is in the short term. The Fed continues to put pressure on risk assets, yields are up, and macro traders are leaning cautious. But here's the twist. Despite those dips, crypto funds just saw nearly $2.5 billion of inflows last week. Think about that. Billions of dollars flowing into funds at the same time prices are falling. That doesn't happen by accident. That's institutions quietly buying dips, setting themselves up for the long game. XRP is trading near $2.76. Binance Coin is around $847. Solana is just under $200. Dogecoin is about 21 cents. Tron is 33 cents. And Cardano is around 81 cents. The market is mostly red today, but still sitting at very high levels compared to earlier this year. So here's the takeaway. Prices may be down a few percent, but institutions are buying, retail is speculating, corporations are stockpiling, and regulators are building infrastructure. That's not weakness, that's progress. And that's something retail often misses. Prices are what we see on the surface, but flows are what drive the tide underneath. When institutions are still putting billions into ETFs and crypto funds while headlines scream about weakness, you have to ask yourself, what do they see that the market doesn't? Maybe they see the Fed eventually cutting deeper. Maybe they see Bitcoin becoming more entrenched as digital gold. Or maybe they just know that every dip in this market has historically been a buying opportunity if your timeline is measured in years, not days. Ethereum's story mirrors Bitcoin's, but with a twist. Its ETFs continue to see inflows too. Some days, those inflows even rival Bitcoin's. That tells us something important. Institutions are no longer one-dimensional in their crypto exposure. Bitcoin is the safe first stop. Ethereum is the next. And once that door is open, it rarely closes again. Now let's pivot to the story that's lighting up retail traders: WLFI. This utility token is about to go through a major unlock, and derivatives traders are swarming. Open interest in WLFI futures has surged to nearly $950 million. That's almost $1 billion in bets on how the price will react to the unlock. You don't get that kind of buildup unless traders smell an opportunity. And that tells us that while institutions quietly accumulate Bitcoin and Ethereum, retail is still hungry for speculative plays. It's the same cycle we've seen before. The big money builds the foundation, and the smaller money chases the fireworks. Now, speculation is nothing new. But what makes WLFI interesting is how much retail has latched onto it before the unlock even happens. Traders are buying premiums, betting long, betting short, just trying to be positioned for the volatility. And that volatility is part of what makes crypto unique. In traditional markets, you rarely see a brand new asset generate this kind of derivatives action. In crypto, it happens again and again. That's why new tokens keep coming. That's why retail keeps showing up. The thrill of volatility is built into the DNA of this market. But while retail is playing WLFI, institutions are writing bigger checks. One of the week's biggest stories comes from Japan. Metaplanet, a public company that has branded itself as Asia's MicroStrategy, just bought another 1,009 Bitcoin. That's around $112 million worth. Their total stack now? 20,000 Bitcoin, worth over $2 billion. That puts them among the top corporate holders of Bitcoin globally. Think about that for a second. while traders panic about a dip from 112,000 to 108,000. A listed company in Japan is buying nine-figure amounts to add to its stack. That's conviction. And it's not just about the numbers. It's about what that move signals. Metaplanet has been explicit. They see Bitcoin as the superior treasury reserve asset. They're not dabbling. They're not testing. They're betting the company's future on it. And in doing so, they're challenging the norms of corporate finance in Japan, just like MicroStrategy did in the US a few years ago. And the more companies follow that path, the more Bitcoin becomes locked up in treasuries, unavailable to the market, pushing scarcity even higher. So, we have institutions buying dips, retail chasing new token mania, and corporates stockpiling Bitcoin. But that's not all. Regulators and governments are moving too, faster than many realize. This week, we saw a flurry of developments. Grayscale and 21 shares filed for new ETFs. JPMorgan backed a $500 million raise for Numerai, a crypto-focused hedge fund. And perhaps most importantly, the US Department of Commerce announced it will begin publishing official GDP data directly onto blockchains, using Chainlink and Pyth as delivery systems. That's government-verified data, on-chain, available for smart contracts. That's not speculation, that's adoption, and there's more. The Commodity Futures Trading Commission, the CFTC, is opening the door for offshore exchanges to serve US clients under new guidelines. That may not sound dramatic, but it's a huge shift in the regulatory landscape. For years, the US has been a hostile environment for crypto trading. If the CFTC is softening its stance, it means policymakers are realizing they can't keep shutting the door. They need to regulate it, not block it. And that change will have long-term effects on liquidity and accessibility. Let's tie all of this together. On the surface, prices are down. Bitcoin slipped. Ethereum slipped. The casual observer might say sentiment is weak. But underneath, institutions are still pouring in billions. Retail is still speculating with nearly $1 billion in open interest on WLFI. Corporates like Metaplanet are stacking sats at a pace that puts them among the global elite holders. Regulators are opening doors, not closing them. Governments are putting official data on-chain. The reality is, the market is building even while the charts are red. So what should you take away from today's roundup? First, don't get distracted by the short-term moves. Volatility is normal. What matters is flows. And right now, flows are still positive. Second, keep an eye on WLFI. It's a retail-driven story, but it tells us sentiment isn't dead. People still want action. Third, don't underestimate corporate buyers like Metaplanet. Every time they add to their stack, it reduces supply. And fourth, watch the regulators. The headlines about hostility are fading. The moves we're seeing now are about integration. And here's a question for you. What matters more in the long run? Bitcoin dropping 4% in a week? Or $2.5 billion in institutional inflows? Drop your thoughts in the comments because that's the kind of question that separates traders from investors. If you're holding crypto yourself, make sure it's secure. Don't leave it all on exchanges. Grab a Ledger hardware wallet. The link is in the description. So to wrap up, Bitcoin dipped, but institutions bought. Ethereum slipped, but ETFs kept rolling. WLFI became the retail playground of the week. Metaplanet doubled down on its Bitcoin treasury. Regulators cracked the door wider. And governments are putting official data on-chain. If you zoom out, this isn't weakness. This is building. That's it for today's Crypto Daily Roundup. Smash like if you found this breakdown useful. Follow so you don't miss tomorrow's update. And as always, we will see you at the top.